welcome to China Money Network video. I'm Nina Xiang. Today I'm with Gong Jie, partner at Pantheon Ventures. Hi Jie, welcome.
Thank you, Nina.
So what are some exciting new trends going on in China's PE VC space you're seeing, and also what kind of funds are you focused on nowadays to back?
The Chinese PE and VC landscape has been going through a very big change. We're seeing two very distinct trends. The first trend is that specialization is definitely deepening. By that, what I mean is that we see generalists setting up sector teams to build verticals around the sectors that they're interested in, rather than dependent on reverse inquiry of deal flow. And those that are originally specialized in different industries are certainly building more of their internal resources to deepen their expertise. Because in today's competitive market, you need to have the sector knowledge and foresight, as well as resources that you can bring to the company to be proposing, something to the entrepreneur and to the business founder that make yourself indispensable to them. And the second trend is that we all know that in 2014 and 15 there is a great proliferation of VC managers, and you will see these days they're rarely the case that companies, before they have profit break-even, has not been invested in by institutional investors, by those VCs. But I think that, in a way, puts the growth capital firms in a bit of a bind, because their operating space previously is wider. And we're seeing some of the growth capital firms leaning a bit forward in their investment stages.
You mean earlier stage?
Moving a little earlier stage, i.e. they would go into companies that are pre-profit break-even, for example. And they, I think ultimately for the growth capital companies, they need to recalibrate their strategy in terms of focusing on areas that are not very hot themes that the entire market is paying a lot of attention to. And they need to also think about what kind of risks, as a growth capital manager, they take or not take. So there's a lot of soul-searching and rethinking of strategy that the growth capital companies are going through right now.
Now let's talk about vintages. 2015, that's definitely the peak market for the mobile internet boom in China's VC space.
Yeah.
How do you feel this vintage funds, how they're going to perform in 10 years' time?
Well, I think with that vintage is really a confluence of several things. There's a huge wave of startups and entrepreneurial enthusiasm, if you will, and there's a lot of capital flowing into the start phase, as well as many new venture firms, emerging managers that are focusing on venture. So generally speaking, with a lot of capital going into a sector, it can create overhang, capital supply vis-a-vis the amount of opportunities. So that could overall depress the, elevate the valuation level and increase the competitiveness of the deal dynamic. So it very much depends on which pockets of the general GP universe that people invest or not invest in 2015. I think 2015 will be remembered as a very, very busy, very hectic, and very buoyant vintage year.
It's an understatement.
And with the subsequent return repression coming out of a generally elevated heated competition. But it doesn't mean that 2015 will not have very good funds. It depends very much on how disciplined the GP is in their fund sizes, in their investment pace in a hot year, as well as their general unique characteristics, what they offer to the entrepreneurs and how they add value to the portfolio companies.
Well, okay, great. Thank you so much, Jie, for your time.
Thank you, Nina.